Thanks for joining us today. Today is, for the record, July 21, 2020. I'm Dudley Baker. I'm the founder and editor here at Stock Warrants. We've been in business for like 15 years, have an exclusive database for all stock warrants trading in the United States and in Canada. And one of the hottest investment sectors going right now are what are referred to as blank check companies, also known as SPACs, Special Purpose Acquisition Corporations. Our interest here at Stock Warrants is that each of these companies has a stock warrant that's trading, and each of these now 100 companies basically in our database are all looking for a merger partner. So incredible opportunities. You may just know a couple of the recent names that have exploded in price, from Virgin Galactic, Nikola Motors, and DraftKings, just three examples here that greatly rewarded shareholders as well as the warrant holders big time. So with that background, we're really pleased to have really a lot of participants here today. I've got my son next to me up on the top, Jeff Baker, who is an economic geologist also, and is a web guy and savvy individual. We've got down below Jason Mudrick with Mudrick Capital, offices in New York and in London, and really happy to have Jason with us here today. And David Kirsch. David is also with Mudrick Capital, is a managing director, and proud to say is the new chairman of the board of Hycroft Mining. So it's really cool. We're going to get the inside scoop from Jason as to his story, and I'd like to hear how you decided to get into the game with the SPCAs. It's always fascinating to me to get the inside scoop, and then to hear how do you go about a filtering process to find a good merger partner, somebody that you're happy with. So believe it or not, guys, it's time for me to zip it up, and I'm going to let you guys talk. So Jason, I'm going to pass the ball to you. Okay, it's all good.
Well, thank you, Dudley. So, we did sponsor a special purpose acquisition company called, the ticker was MUDS. It's since been sort of de-SPACed because we merged it with Hycroft Mining. Mm-hmm. We IPO'd our SPAC a couple of years ago, and the thinking at the time, it was a very different world than we live in today, but the thinking at the time was nobody had raised a SPAC that we had known about with a very specific mandate of merging into a post-bankruptcy company. So a lot of SPACs had been raised by industry veterans to go after certain industry verticals. So, you would have a management team focused on paper and packaging, and they would look for a paper and packaging asset that they could take public through merging with their blank check company. But nobody had looked at the problem that we were seeing in post-bankruptcy equities. And that problem was that a lot of them were very illiquid, right? So a lot of post-bankruptcy companies had good businesses, but were effectively private because in bankruptcy, the new equity had been given to the old creditors and it had come out as a private company. Mm-hmm. But the process of bankruptcy deleveraged the business. So you had this good business that had a bad balance sheet. The balance sheet was fixed through the bankruptcy process. There was still a good business, but the company was now private because the nature of the deleveraging was that debt was swapped for equity, and the company was inadvertently it was previously a public company, should be a public company, it was inadvertently taken private. So, our core business here is not managing SPACs, it's actually investing in distressed companies. And we saw amongst a number of our portfolio companies that they were companies that should be public, that had very exciting story to them, that had public company management teams, but were private. And a SPAC was a very quick way to get these companies to be listed again. So that was the thinking. It was, I think, the first of its kind. It was a SPAC not raised to go after any particular type of industry, but to be the going public event or the liquidity provider for a post-bankruptcy situation. You know, there's a lot of advantages to SPACs, as I'm sure you and your followers know. They can be effected quickly. Typically, an IPO can take, you know, a year or longer because you've already gone through the going public process. And what a de-SPACing is effectively is a merger negotiation, and that can happen in 90 to 120 days. So it's quick. Oftentimes, in a merger, you can provide forward-looking guidance. You can provide projections, whereas in a traditional IPO, you can't. So for a lot of these companies that have been private and have a turnaround embedded in them because they were, you know, they were part of a bankruptcy, being able to tell the world what management thinks the company will do over the next 3 to 5 years can be very advantageous. You know, the negatives are there's some dilution that are associated with warrants that you have to give this original SPAC investors to get the company public. But if you have an asset that has enough upside, just because of the nature of the company, you know, a little bit of dilution can be a small cost to pay to get a company public quickly. So SPACs are a really interesting tool. They have exploded, as you mentioned, and I think for the right situation, and we think Hycroft is one of those situations. For the right situation, they can be really advantageous.
Jason, do you see maybe a Mudrick Capital Acquisition Corp 2 coming, or is this a one-shot deal?
No, we have not started working on a Mudrick Capital Acquisition 2. We're very much focused on making Mudrick Capital Acquisition 1 a success.
Okay.
We're very involved still in Hycroft Mining. So whereas a lot of SPACs merge and the original sponsor is sort of gone, we put new money into Hycroft. We wrote a $25 million check into the deal.
Okay.
In addition to our existing ownership that was created through the SPAC and through our prior ownership in Hycroft. So we're very much all in the success of Hycroft Mining. I do think that it's a good time to have a SPAC in our arsenal. So, you know, I think we will do a second SPAC. But it's certainly a lot easier to do it when you can point to the prior one and say, you know, look how successful SPAC 1 was. I think people will throw money at you to do SPAC 2 if you have success with SPAC 1. So yes is the answer, but not just yet.
Okay. I guess in full disclosure, I should let everybody know that I have taken a small position in the open market in the Hycroft Stock Warrants, being basically most of my portfolio is in the mining arena. And so when I saw you guys come out and the merger with Hycroft, I thought personally, I need to have a position in this. So a lot of my subscribers get to see my entire portfolio. They know what I own and basically why I own it. So anyhow, I just want to let all of our listeners or viewers here to know today in full disclosure that I do have a small position, but yet it is a position. So I'm fully on board with your story and everything here.
And to you, David, at what point did you enter this equation with Hycroft? Are you the liaison, so to speak, from Mudrick and then just assumed that role? What was this, you know, since last year, last month? At what point?
Sure. No, we've been involved in Hycroft for several years now, probably, you know, around 6 years. I've been the day-to-day point person on that, you know, since the inception of that. And I've been on the board. I was on the board of Hycroft as a private company from late 2015 through its merger with the SPAC, and then stayed on the board for the public company post merger.
So you have a lot of insight into the workings that happened, and I'm sure y'all have already heard this conversation 1,000 times over regarding the bankruptcy. I'm sure this was part of your own analytical routine to check this distressed property and the conditions of the bankruptcy and whatnot. I mean, this one I believe made it all the way to the Supreme Court at some point. So there's a lot of conditions around that, but I want to say the biggest one that stands out to me, and it's not necessarily the geology, because it's literally almost a known commodity at this point. What's there is what's there. It's a large low grade deposit. You kind of know what you need to do to extract the materials. The question would be when so much of the labor pool was released back in 2015. How does it look now for Hycroft in order to meet the projections in the future to actually be able to reacquire that labor pool that's in competitive Winnemucca district right there, where you've got, 10, 20 extra mines, everybody trying to hire operators. And so my question would be, do y'all have a mechanism? Do you have the connections to that labor environment to bring in what would be required to actually meet the projections and the amount of tons you plan on putting on the leach pads?
Yeah, without any commentary as to the projections themselves, as Jason said, we are a public company. Just commenting on the labor, because of the bankruptcy previously, one of the really important things for Hycroft going forward is to set the right culture and have that culture then be an attractive place to work. Because as you say, in Nevada, there are certainly, plenty of places, especially in an $1,800 gold world, for the mining labor force to choose to work. And so one of the key focuses for the board and for the existing management team is to set that right culture and put the right people in place to do that. The mine had a new GM start at the beginning or towards the beginning of 2020. He's very focused on culture and on hiring. I think he's made strides in that hiring as we've ramped up. As was disclosed, the old CEO did step down, and we are running a search. And as we think through the right person for that role, again, I think someone who is a good leader and therefore can attract as many talented people to the asset is definitely a quality that's very high on the list of the board in terms of what we're looking for exactly the reason you highlight.
Yeah, and if I could just comment, not about Hycroft specifically, but just very high level. One of the beauties of capitalism is that human capital will flow towards financial capital and where proper resources are allocated. So yes, that doesn't happen instantaneously, but if you think about where Hycroft was 4 or 5 years ago as a private company, I can say we were very, very much in cost-cutting mode. We had stopped producing at the mine at one point. There was no hiring of talent, and that was because we were financially constrained. And we were watching every dollar that was spent. And it's not that we're not watching dollars that are spent now, but one of the advantages of being a public company is today we have $500 million of equity market cap, and that gives us access to a capital source that we didn't have before, so that we can start hiring the right talent and putting the right people in place. Because at the end of the day, as Jeff, as your question implies, and I think accurately so, the success of this project is going to be about the people that we put around it. The asset is there. Gold prices are where they are. We can't control that. The asset's been there for millions of years. It's a somewhat known commodity. I think the kind of recoveries that might be achievable, particularly with the sulfide ore, people are still learning about. And I think our public disclosures have been pretty clear about our views there. But if we don't have the right people, and we can't execute, and we can't put the tons on the pad, then we're not going to produce the ounces that will make this a wild success. So, getting public is one of the first steps to putting a bunch of really smart, incented people around this asset so that it can be a success.
So with that in mind, on the technical presentation, and actually probably take it down a notch just to the regular presentation, it mentions the projections and again, I know not in the sense of forward-looking projections, but because this was written almost exactly a year ago into July 2019, it did give projections for the next 12 months as well within that. So in your own perspectives as shareholders, investors, and principals in it, are you happy when you see what's taking place? Are they aligning with the idea of what was going to happen in that presentation? And at the time, those were forward-looking statements. At this point, we're a year into the future, so it's no longer forward-looking as to what happened the last 12 months. And so in that concept, when you look at it, are you satisfied? Obviously, you must be, because a lot of this was completed end of May. So obviously you had to have your pulse on it and see they were meeting targets at Hycroft prior to Mudrick finalizing the deal, if you would. Were the benchmarks set in terms of tons put on the pad? Were those met under the conditions prior to you finalizing the deal? I would assume that that's probably part of the impetus of you saying, yes, we're going to do it, is that they were meeting targets.
Yeah, look,
is that not accurate?
No, look, the way I would respond to that, and I apologize because I can't answer the question as direct as you might like, given our public company status.
Right.
We are in a quiet period until we release our 10Q, which will be in the middle of August.
Okay.
And after that's released, we could certainly talk about second quarter earnings publicly, but we can't right now. But what I would say is that the feasibility study that was produced and attached to some of our SEC public disclosures, there's nothing in that feasibility study that we don't stand behind today.
Okay.
What has changed so materially since the feasibility study was produced is gold and silver prices. And obviously, we don't have a crystal ball into what's going to happen with gold and silver over the next couple of years. And this is a very long-lived mine.
But it was pegged at 1,300 in that study, so we're way ahead of the curve here.
Yeah, gold was at 13, and I think we used 1733 for silver, and we're looking at silver over $21 today, and gold at 1840. But in the NPV 5 in the feasibility study, and again, this is a 30-year life mine. So what happens last quarter or this quarter or next quarter is not going to move the needle so much on a discounted cash flow analysis going out 30 years. Using that $1,300 gold and using $17 silver, and I think most people's long-term projections are materially higher than that today. But using those numbers, the NPV 5 came out at around $2.1 billion. So this is a gigantic asset.
Right.
And perhaps more important, in my opinion, is it sits in the U.S. A lot of these very large, long-lived mines are in regions where, from a geopolitical standpoint, I think the market would demand a discount and not a premium. And having an asset this large sitting in the U.S. in Nevada is somewhat unique. So, I'm not trying to dodge your question. The lawyers have told us that we actually can't talk about current earnings until they're publicly disclosed. So we're happy to do a follow-up.
Oh no, absolutely. No, I literally just stuff that's been going through my mind. I read a lot of your literature over the last couple of days, and just trying to get a handle on the overall situation. It really did not appear that the overall structure of both entities had a lot of geologists per se, that it looked like this is being handled like an industrial endeavor, that it was viewed as a distressed property with a commodity that could be extracted. Very little on the exploration side. In fact, there's been thousands of holes drilled on this property. It's not that you can ever assume anything within geology or within the context of being directors of any company. However, the general dissemination across this type of deposit is somewhat expected. So I think it's safe to say it's a quasi-known commodity, and it looks like that the idea is how long until y'all can turn this into an endeavor that's actually profitable regularly, as opposed to every 5 years, every 10 years, a couple of good years here and there. I mean, let's be real. This has been around for 30, 40 years. So when you have the slowdowns in, say, the 90s, and it was shuttered, and then again in 2015 when it was shuttered, a lot of that was pegged to falling gold prices, distressed markets. But the reality is, in 1987, when found this thing, I mean, last time I checked, the gold price was phenomenally low. So for me, in hindsight, and I'm sure this came along with the analysis when you looked at the distressed property, but when you look back, if this is a leach process over the course of the last 30 years, while those moments, of course, the price was low, the widget still had gone up 3,000%. So it doesn't quite make sense in hindsight how they weren't able to capitalize that. They blamed it on rising costs and whatnot. I understand that, but the reality is the widget was worth a lot more money. How did you start in the 80s and not be able to make it so profitable in 2000 or 2010? I personally don't quite understand that. However, the question would be, do you see a way to make this consistent? Is that the goal, is to turn this from a casual operation into one that is consistently intending to produce?
Yeah, no, look, it's a great question. I think it's the exact right question. And what I would say, again, I can't comment on anything forward looking, but what I would say is this isn't rocket science. It's an open pit mine. It's a gigantic mine. It's a lower grade ore, but so it's very sensitive to the price of gold, but that's working in our favor right now. It's also incredibly levered to the price of gold, given how much we have, almost 20 million proved and probable gold equivalent ounces. And that's just what's proved and probable. As you know, where there's gold, there's usually a lot of gold. And there's a lot of stuff around this mine that we haven't proved out yet. But just the 18 or million so proven probable ounces, highly levered to the price of gold. It's really execution. It's execution and it's capital. I think that we've taken the first step to solving the capital problem by getting access to a public currency. So the SPAC really helped with regards to that. And I think they're intertwined to Dudley's question. Without resources, you can't attract the right talent to the mine. And without the right talent at the mine, you're not going to be able to successfully execute. But if we can put the right capital structure in place, which I think we've taken the first step to doing, and we can attract the right talent, more to come on that front. Not to get ahead of ourselves, but let's assume that we're successful in attracting the right talent over time. I think that we should be able to produce in a much more consistent manner in line with where the feasibility study showed. Of course, there's a ton of uncertainty and I can't predict the future, and I'm not making forward-looking comments, but all the ingredients are there for success. We just got to execute.
Right. It seems like the timing is right at the moment. Your timing and completing the merger now with Hycroft, I think that's great. If we did not mention before, the Hycroft symbols for any investors listening here is it trades in the U.S. market under HYMC, and the warrant trades HYMCW. So just for everybody's knowledge there. Now, Jason, so I know your company is still a major shareholder in Hycroft. What does that relate to? Is like 20%, más o menos? So you're a solid investor behind the company. You just didn't form it and you're out of here. You're on board.
Yeah, we actually own over 40% of the company.
Okay.
And we just invested another $25 million into the company in early June as part of the going public transaction. So we have a very large position in the success, in the success of Hycroft, and we're believers. Success doesn't happen overnight. There's a lot of hard work that's going to need to happen to get this mine producing, as Jeff and I were just talking about. But there's nothing that I've seen that leads me to believe that it can't be successful. So we're extremely bullish.
Okay. Just a quick pause. I do realize it's probably 11:30-ish. I know David had said he had a previous engagement.
Yeah, if it's okay, I'm going to drop, and obviously happy to follow up.
Let me ask one question before you leave us, because when the timing gets right, where people can travel again in the world, Jeff and I would love to like do a mine tour up to the facilities.
Obviously, with everything going on in the country, I wouldn't commit to a date in particular right now. But as soon as it is advisable to have guests out at the mine, we'd love to have you out there. It is, if you haven't been before, it is of a pretty impressive scale, and I think actually seeing everything from the size of the deposit to the Merrill-Crowe to the leach pads, all the way through is really instructive and informative. So happy to try to help facilitate that whenever the time is right.
Okay, no, that's cool. Yeah, and if you got to run, that's okay. Yeah, so I think we're
Thank you very much.
Yeah, okay, thanks, David.
Yeah, and Dudley, Jeff, I will commit now that if you guys are going to go out to the mine, I will happily meet you there. I think it would be great to see you guys in person, and I think it would be a great idea to show you guys the mine. I mean, it is. I haven't been there in a little bit, but it is impressive. I mean, the land alone is the size of Manhattan. I don't think people appreciate the scale of this project. I believe we have the largest Merrill-Crowe facility in the world. If not the largest, it's one of the largest. The rock crusher is one of the largest freestanding man-made objects in all of Nevada. I mean, it's very impressive. Very impressive to see the mine. So I'd be happy to meet you guys out there. I think that would be a really fun day.
That would be great. As Jeff said, cooler weather would be great. It's probably hot as hell in the desert right now.
Yeah.
We could go today.
Yeah. Well, I don't think we want to go in July or August, but once it's safe to be together, when COVID's done, and I think you guys should also be aware that we publicly announced that we're looking for. We are in the process of a transition to a new CEO. When that new person, right? Yeah, when that new person is hired and has a chance to get his or her feet wet for the first couple of months, and it's safe to travel and it cools down in the desert, that would be a good time.
No, that would be,
whether that's September, October, or November, I think we should plan on
it. If it's okay, I'll just kind of wrap this up and say, to me, for any of my subscribers or other investors looking at Hycroft as an opportunity, I always say, everybody, do your own due diligence. Visit your website at hycroftmining.com. And I also look forward to seeing the new financials when they come out. So this will be middle of August, so to speak, somewhere in the August timeframe. I think you mentioned earlier, Jason. So I think I know I've got some subscribers that are looking forward to seeing some more recent numbers. But anyhow, I think it's obviously a great opportunity. I think the timing is incredible for you to close the deal when you did. with Hycroft. And now the gold and silver markets are going to participate. Maybe they just waited for you to do the deal before they decided to take it. That's the way I'd look at it. Okay, I really appreciate you being with us today, and I appreciate so much for you reaching out. It's a great opportunity for us to kind of hear the story and your story and the Hycroft story as well. And we really look forward at a future date that works out to be able to visit the properties and get up there and see it, and be good. Great to meet you in person. That would be really cool. So we'll just stay in touch. And Jeff, is that okay? We'll just
so have a great day. And no, I appreciate all the information. And no, it was a great talk, for sure.
really appreciate it.
Thank you both. I look forward to seeing you in Nevada soon.